What the heck is going on with the Lakewood Ranch real estate market? Hey, it's Sean Reddy of the Keller Williams Reddy Group, and each and every month we bring you 9 key vital signs of the real estate market here in Lakewood Ranch, how they stack up month over month, how they stack up year over year. We'll take a look at a little bit longer term perspective as well, so that if you are in the market or plan on entering the market, either you're selling a home or you're buying a home or you're selling a home to buy another home, then you can put this data to work for you and create leverage in your move. And stay tuned to the end because we'll talk about exactly how to do that. So let's get into the month over month first. And for the color coding, if you haven't seen this before, if it's shaded in green, these metrics are moving in favor of sellers. And check it out, there was a whole heck of a lot of green in July. In July. If they're shaded in red, then that metric is moving in favor of buyers. Yellow means it's exactly the same. So July, it was a total green fest, and now it's coming back to more of a 50-50 share here between seller favoring metrics and buyer favoring metrics. So we'll start with the biggest movers. Market time. Average and median market time both up by 21+%. Average is up 21%, median is up 24% month over month. So pretty significant difference when we're going from 90 average days to 109 and 67 median days to 83. And mind you, that only measures the time between a listing launch and it going under contract. It has nothing to do with the time it takes to close. So if you're moving and you're working off the averages, expect a 4, 5, 6 month even time in order to do so. Now, other metrics moving in favor of buyers. Well, why that favors buyers is, well, one, you have more time to make a decision, always great. And 2, it creates more leverage with some of these homes that have been on the market for quite some time. Probably means that they're mispriced, or have been at least. Yet use that to your advantage. Other buyer favoring metrics, the average price. Now this is smaller market. We're gonna see some wild swings. We're only talking about 192 closed sales, but the average selling price of what closed in August is down by 7.3% compared to July. Well, July was up 11.8%. So again, we'll talk more about these wild swings. Median price down 3.1%. For the seller favoring metrics, biggest mover is inventory, down 9%. It's the 5th straight month of declining inventory. And we're talking big chunks here because back in June, we're talking about 900 homes on the market, 940, 948. So seeing declining inventory all the way down to 756 as a seller, that's a lot less competition. New purchase contracts up for the second straight month, 3.9% this time, and closed sales up for the second straight month, this time by 7.9%. New listings remained exactly the same, 191 last month, 191 this month. And lastly, jumping down to the bottom here, this median sold price to list price ratio, it does measure the relationship between the selling price before concessions and the last asking price, the one that actually made it go to contract. That is up for the second straight month, this time by 0.3%. So I call it the leverage factor or the leverage ratio. The closer it is to 100 or more, the more leverage the sellers have. And below that, 96.57%, all the way up to about 98%, tells me that the buyers are out there hammering deals home. So what does this look like year over year? Let's take a look at that next. So here we do see a little bit more green in the picture. And we'll go to the biggest moving one is purchase contracts up a sizable 37% year over year. So that's taking it from 135 new purchase contracts to 185. I know the market is bigger in terms of new homes. This does factor in both resale homes and new homes as well. But that's a jump, especially when you consider that new listings are down by 33% year over year. Last year, this time, 284 homes were entering the market compared to 191 this year, this time. Both the average and median prices are up. Average up 5.4, median up 8.5%. Again, only measures the homes that closed in the month of August compared to August of last year. So it's not necessarily indicative of values across the board. But hey, up is up. And if you're a seller, you'll take it. Closed sales up a whopping 1, not percent, but 1 unit, 191 to 192. Now on the flip side, the buyer favoring metrics, those are in the red. Median days on market, big jump, 70% increase year over year. Average days on market, right behind it at 47% increase year over year. So because it's taking longer for these homes to sell, that does create more leverage, which brings me to median sold price to list price ratio down 1.6%. What does this look like on a little bit of a longer term time horizon? And I've been keeping these since February of 2024. So every single month we get more and more perspective. So this first graph, this is average and median days on market. Average in the blue, median in the red. You can see the general trend is upward, and it does fluctuate a little bit here and there. This one's my favorite. Available homes. I didn't start keeping available homes till the start of the year, so it's a little shorter line. But available homes is in the red. New purchase contracts are in the yellow, and new listings are in the blue. Now, when the market feels incredibly slow, the gap between the red and the yellow lines are at their widest. But with the inventory continuing to dwindle and purchase contracts at least remaining steady, that gap is going to shrink and the market's not going to feel as slow if you are a seller. And it may feel a little bit more, I don't want to say frenzied, but a little bit more urgent if you are a buyer as that gap shrinks. Especially if we continue to see that blue line tick down, which again is new listings entering the market. Closed sales, ups and downs, and not too much of a trajectory down, but slight downward trend. Average and median price, again, with a small market like this, when we're talking 150 to 250 sales, there's going to be some jumps. But generally speaking, the prices have been relatively flat and are largely expected to stay flat for the time being. Finally, median sold price to list price ratio. You can obviously tell the downward trajectory here, which means that buyers are again striking better deals for themselves as relative to final asking price, because they don't have another buyer looking over their shoulder at the same house, making it more competitive. So there you have it. There's the month over month, year over year, and some trend lines for the Lakewood Ranch real estate market. This is Lakewood Ranch wide, all residential property types. So if you're looking for something that's more specific to your neighborhood, your street, your village, what your property type, your price point, whatever, let us know. Drop a comment, send me a DM. Again, Sean Reddy, Keller Williams Reddy Group. Happy to build this out for you specifically and keep you informed. And as far as how to leverage this data, first of all, trust your real estate professional who knows this data inside and out. And if you don't have one, we would love to be a resource for you here in Lakewood Ranch. I am a Lakewood Ranch resident myself, and would be happy to help you put this data in place so you can make the best move for you and leverage it to your full advantage. Thanks so much for watching, and we'll see you next month.